Welcome to Dividend Income. In this video I'm going to be analysing AbbVie, ticker symbol ABBV, and briefly looking at the company, dividend yield, payments, history and their current financials, weighing up whether it is worth purchasing or to avoid. AbbVie is a biopharmaceutical company founded in 2013. Now this sounds like it is relatively new, but it is a spin-off of Abbott Laboratories. Abbott Laboratories was founded in 1888 and is an incredibly successful pharmaceutical giant. Now, why did Abbott spin off AbbVie? Back in 2014, according to Abbott's Chief Financial Officer Tom Freeman, they were effectively seen as two different businesses under one roof, both with different profiles and directions. They talked with investors about selling the research business off, but they voted to keep it in and spin it off under the new stock of AbbVie. AbbVie would operate as research-based pharmaceutical manufacturer, while Abbott would specialise in diversified products including medical devices, diagnostic equipment and nutrition products. So what does AbbVie develop and sell? Here are a list of their products which covers an array of treatments. These are treatments that will always be needed and will be household names to anyone with any of these conditions. The spin-off has been successful. AbbVie now has a market cap of nearly $239.95 billion and revenue of $56.2 billion. AbbVie's revenue continues to grow year on year. To put things into perspective, Pfizer has a market cap of $259.4 billion. This really gives you an idea of how big it is. You can see here the revenue increases, so steady year on year growth. If we look at the annual breakdown in the financial statement, we can see that the net income was $11.542 billion, earnings per share $6.48, both up from the previous year, which is great. On the balance sheet, AbbVie has a lot of debt, which would be worrying, although offsetting this, it has a lot of cash in receivables that were due within 12 months. AbbVie has a strong track record of dividend growth and a decent yield of 4.3%. It pays quarterly in February, May, August and November. The next dividend payment is on the 15th of November and the ex-dividend cut-off date is the 13th of October. If we look back on this, it has recorded data from 2013, paying 40 cents initially, and then with regular increases all the way up to where we are now, which is $1.41. From a dividend point of view, this is great. These are big jumps in increases and no dividend cut history at all, which is fantastic. Based on trailing 12 months earnings, the payout ratio is very high at 79.89%, but with pharmaceutical companies, they usually have enough cash flow to cover it. If we look here, it was reported that it only paid 42% of its free cash flow in the past year, so we know that it's sustainable and the dividend is not at risk of being cut. Based on this year's estimates, it's just over 40%, which is a big improvement. What is concerning? Mainly competition, other companies releasing cheaper versions of their treatments. One of AbbVie's best-selling drugs is Humira. AbbVie have had a complete monopoly of nearly 2 decades selling Humira. Unfortunately, this looks like it's coming to an end. 8 copies of the drug will arrive in the next year, the first arriving next January, the injectable drug approved for inflammatory diseases. The main patent protecting Humira expired at the end of 2016. AbbVie has obtained a further 132 more patents. Most of these relate to the medication's formula or manufacturing process. So as long as rival companies find a way of bypassing the formulation and manufacturing process, there isn't much they can do, although AbbVie's legal team will make it as difficult as possible for them. AbbVie will have been aware of this new competition coming for a while and have no doubt braced themselves to deal with it. It is a big part of their revenue and reducing its independence on it will be a priority. So what do the experts think? Tip ranks have it down as a moderate buy with 7 buy, 5 hold and 1 sell. It has an average price target of $160.54, so that's an 18.39% upside. Market beat again have a moderate buy, 9 buy, 6 hold and 1 sell. An average price target of $159.35, so that is 17.17% upside. Nasdaq have it as a buy based on 19 analysts listed here. They have a price target of $160.54. So based on that, what do I think? The competition for Humira is concerning as it is a large portion of its profits. On the other hand, they have a diverse lineup of products and continue to make acquisitions of other companies. The stock price has come down a lot since its high of $175 back at the beginning of April. It is now at the $135 level, which is a price I'm comfortable with paying. The yield is enticing at over 4%, so I will start a small position and then continue to dollar cost average over the next coming months. Thanks for watching. A quick disclaimer now. As always, you should do your own research when investing. I'm not a financial advisor, and these are my personal views. The purpose of this video is to give you additional information and hopefully help in making informed decisions. If you enjoyed the video, please like and subscribe.